It is now 8:35. It's time to bring in Nic Chahine. He's an options expert. He joins the show every Tuesday to discuss this week's. Well, he doesn't come every Tuesday. He took a vacation, but he's back
Good
with us.
morning.
Hey, Nick, what you do? Where'd you go on your vacation?
Cancun.
Oh,
Whoa.
okay. Yeah, and I see had some good internet, and you signed into the show there. We really appreciate it.
Absolutely. I needed to stay in touch, even though I'm on vacation. I never get completely unplugged. The only reason I don't come on the show is because the internet is unreliable, and I just don't want to be cracking all the way through it. So I figured I'd bow out and give you guys a break.
No, that's okay. No, we missed you, but now you're back here, and not much has changed in the market, right? Trading range is it starting to get to you a little bit?
Yeah, we're still trading the same range, but I may have said this before. I can't prove it, that the amplitude is getting bigger. Like this, if you think of it as a sine wave, we're touching extremes much closer together, and I just can't help but think that whichever way we break, it might be a little more violent than the normal, just busting through a range that we've been trading for a while. The longer we spend here, I think the bigger the break would be away from it. So, whatever you're doing, keep doing what you're doing. Just be ready to change at the drop of a hat. And I also heard you guys mention something I think it's worth discussing. You keep saying the buy the dippers. And I think we should rename it something else because it's no longer buying the dips. If you remember when we used to have dips, they'd be buying it and running with it. This gives the impression that they're buying everything and just continue on up. It's more like hopium
Fading.
popper. They pop on bad news. Yesterday, I know the media said that it wasn't, they weren't phased by the good news or whatever, or the bad news. It was absolutely the bad news. I mean, the bonds ripped and the rates dropped. So they took the early report, which was pretty bad, and they ran with it. And same with this morning. You saw they shaved about 2.5 points off the S&P as soon as the bad report comes out. So these are hopium poppers. And they're just buying the fact that we may get a delay in a rate hike, which is the fact that something bad may or may not happen. And to be honest, I can't even remember when was the last time we had a pop or a rally on fundamentals. If you think back, you can help me think when that was. I just can't remember how far back it was, where we had some good news and the markets rallied on better prospects for the market just based on the market fundamentals themselves. I mean, we've had individual stock stories like that, like Netflix, for example,
Yeah.
or Home Depot today, but we don't have anything that's broad-based. And that's the problem for me, to chase pops like this. That's why I keep calling relief pops. And I tend to fade them. Depends on how big they are. I may give them a day or two, but credit call spreads into those, which is a bearish play, which is selling a call spread above the prices with a decent buffer, and then just collecting the premium and waiting for time to kill the value or buy it back at cheaper time.
I mean, the fade trade has just worked here, and that's the trading range. And it hasn't worked on every individual stock because, like you said, there has been some that have been trendy here. But overall, this market has just been in a trading range there. And if you've been selling, the rips and buying the dips, it's worked. So I think, maybe we shouldn't call it buy the dips, but just call the fade traders have been in control here for basically the last 9 months here now. And until proven, that doesn't work anymore, I think continue to think that trade works.
Absolutely, and that's been my bread and butter all year long. Every pop that I disagreed with based on fundamentals, I sold credit call spreads into it to way out in time. I mean, nothing that would make you sweat. Very few issues, and then when I think that we've sold off for no reason or too far down, I try to catch a few of the credit put spread, which is a very bullish trade, which is the opposite of the other one, where I sell a put spread below current prices at a premium, and then I just wait for time to kill the premium if I'm correct with my estimate of how far down I need to go. So, for example, when Apple went down to 109, I sold some credit put spreads, and they're now green, so I'll just close them soon enough. I don't do it with everything. I need to know that there's value there, and if there's no value in Apple, we should all go home. Especially at 109 for no reason and then just a spike down. I see people writing it down. Shades of when it fell out of grace the first time from 700. Remember they were talking margin compression. Oh my God, it's bye-bye. It's dead company, basically. The sentiment was for Apple, and I was thinking, you guys are nuts. You loved it at 700. You hated it at 400. Makes no sense. So this is the same kind of thing where like they're all worried about Apple, yet they buy frothy names. I just don't get it. So have a basket of tickers that you like to trade and know the values and know the ranges. And if you see an opportunity, pounce on it.
What about Apple here? Nice trading range. A lot of people are talking about breaking down through the 200-day moving average. Is probably coming down to the 120 area. Did find some support in the area right before earnings and getting the top back. Got a nice rally back towards the 120 area. You just traded in the 110 to 120 area here, or do you think we're going to get back firmly in the 120 handle and challenge all-time highs?
Well, it's this week. It has several magnets. You can think of them at the 110, 115, 120, and 125, even 35 and 40. But the strongest ones are where it's at right now. So it has challenges at 115, but it does have a lot of support also at between 110 and 115. It has another challenge at 120. So I'm not chasing any rips in it. I don't expect any rips in it unless the markets completely rally. Or it has some good news. I don't know where the good news is going to come from, but I know I'm comfortable going long it if it gets hammered. So if it comes down to 110, I would nibble. And I would, longer term, via credit put spread is my method. Some people like to buy calls or buy the stock itself. I'm not as risky because when you buy a stock, you put all your money at risk right away. I don't like to do that. I like to choose my risk level and the time frame for which I want to take the risk. That's why I do options. And so I don't expect it to run up. I did expect it to come down to these levels if it broke the ascending trend that it had. It had a long-term ascending channel, and then it broke the bottom end. And if you eyeball the ideal target, it would be around the 112.5, and it went there, overshot, and that's why I went long it. So now I'm seeing if that area is going to hold, and if it's going to hold, chances are it could creep back up, but then it will find resistance coming back at the 125-ish level because that would be towards the bottom end of that channel I just told you about. So I don't chase anything, not even Apple. But to be worried about the market itself, I'd be worried about Apple. If I'm worried about Apple that badly, I mean I should be worried about everything. Because I don't think that there's any specific Apple-centric issue that's going to break the company. Yes, maybe they'll make a few less bucks because they sell 2 or 3 fewer iPhones, but they're printing money in several areas. So it's an iPhone company, but it's a beast. So if I'm worried about Apple, I should be worried about everything.
Nick, what about your thoughts here on Priceline? We know this is one you like to trade a lot here. Stocks had an impressive run there, had a nice pop there off the earnings report too, and it went from $12.30 all the way up to almost $1,400, got up to $13.95. But then the fade trade worked on that one again too, and the stock actually quickly came in and gave back half of those gains that day. Has been drifting down. Yesterday finally catches a bid, first green bar since the earnings report here. What are your thoughts on Priceline?
Priceline is moved based on technicals, obviously, and the earnings. And my goal was for it was a little around 1375, 1380 to overshot a little bit on that one candle. It's coming up back on the same area of, let's call it an opportunity to break out again towards those highs. And that would be just pretty close. I mean, it's like half a day's worth move, which is around the 1325. So if you draw a line at all the highs except for the big peak, and you'll see that line will pass around 1325, which is really probably the opportunity area. So it has put in higher lows for the past, let's call it here, early July until now, and butting up against that upper trend. So if it breaks out of that trend, then it might have a chance to revisit the 1400 or higher. But if it doesn't, it fails, it could break down to the 1200s, 1220, 1200, 1220 area. So basically, it has an opportunity to move soon within the next couple of candles. The direction of the move depends on where the markets want to take it. So the way I usually play that is I pick a direction and I do a trade. I have not yet because I don't have an opinion which way it's going to break. I will wait another candle or two before I commit to it. And if they do take it to 1400 or so, I may short it via some very far out, very high calls or call spreads and see how they do.
Nick, we know you've been a little tepid on Alibaba here. Not a good earnings report while you were gone. Chaos in the Chinese market here. Anything here to get you interested in Alibaba?
I can't do it. I got lucky last week. I told my guys I have a hunch that I need to go long Alibaba, and we did into the one green day it had via calls, and it was an easy moneymaker. It was small lottery size, but as far as going long, I think Dennis, you said it earlier today on your show that you need to see some sort of stabilization or before you go long a stock. And when I look back at the history, I know you guys mentioned in the 60s, I don't think it ever traded there. That was the IPO price, but maybe nobody got that except the ones that were allocated. So to me, I have no bottom against which to trade. So what am I trading? Just hoping it doesn't go there? I need to see something. Plus, if you look at the pattern, it's technicians will probably hate me for saying this. It's head and shoulder-ish in nature, meaning it tried to rally, it failed. It tried to rally, it went a little further, and the third try is worse than the second try. So in nature, the bulls look tired, and if they can't hold here, you could have a chance to buy it in the mid 60s or low 60s. I don't know where it's at right now. It's 75 something. So it might have $5 downside in it, but I can't tell you that because we have nothing against which to throw that. So I'm not inclined to catch it with both hands. If I want to nibble at it, maybe I'll buy a debit call spread if I think that it's going to go up. But then again, the Chinese market affects it directly. And if we have bad moves in China, Alibaba will suffer. And just like any other ADR that's trading here probably will be tied to China.
Nick, I want to get your thoughts on a crazy mover here. OMER this morning is now trading up 70%. Stock went out at $14.55. There's a lot of variables here. We were just talking about this before you came on the show. So 20 minutes ago, the stock was at $19.50. They did come out with some additional data. It's popping even more here, $25.50. A lot of volumes already traded, 590,000 shares. Short interest on this thing is 27%. There's so many different variables coming into play here. How do you approach a stock, like if you really want to trade something like this? How do you approach trading something like this?
You're saying it's trading 25 right now?
It's trading 25.38. It just ticked up to right now. I was 24.65. The thing's just moving around handles here right now. 14.55 is where it went out. It's just incredible movement here. Obviously, we're getting a little bit of a short squeeze here with the 27% short interest, but holy cow, this thing is just in blast-off mode.
Uh-huh. So obviously, it's I don't know the reason why it's moving. I assume it's good news.
Drug news.
Right. So if it's fundamental and it's going to move the needle, it's one of those things where I would say to myself, dang it, I missed it. It's at all-time high area. For all intents and purposes, it is the all-time high. It had a few peaks above it. For me, I call it's too high for me to chase and too hot to short until I see what's going to come. Yeah, I can't short it. I mean, you said it's already short enough, and God knows how many days it's going to take to cover that. So a move this violent off of $13 is to be respected. So let's see the volume on it, how it's going to play out. And I would not go long it here, even though I may miss another $20 move, but it could also price it back out. I have no idea what it's too high for me to chase and too hot to short. So usually I say, dang it, I missed it, kind of a deal. So I'm not on board, and those who are on board, kudos and congratulations and party at their house today. So it's an incredible move, and so that's why I don't do any credit spreads in that arena altogether. So.
Right, you have to avoid that. Nick, we got a couple stocks coming out of the chat here, and the big talk of the day has been the Walmart earnings. Did dip under $70 here. Not bad missed on the EPS, better revenues, lowered guidance here, problems with the dollar. What should give us your thoughts on Walmart?
So is there a steak dinner on this one or no?
No, no. Tennis has got me pretty good here. I've been cooling my chops a little bit, so we have nothing on this one.
One of you two, I know, I heard this morning wanted to buy it at 60 or low 60s. We may
Me.
get a chance. We may get a chance at that. Technically speaking, I see it. Remember, I told you like a really sloppy way of interpreting Head and Shoulders. I just look at the poke up to 87. That makes a huge head and tiny little shoulders if you squint really, really hard. So I don't like the spirit of which it's trading, and if we see it in the low 60s, I would not be surprised. In fact, I drew a line down to there as one of the possibilities. So what do I do with that information? If I'm a credit spreader, I don't sell a credit put spread trying to catch this falling knife anywhere at higher than 60. So if I can get any premium at 60, I may try it there after the fall today. But if the premiums are juiced, because it's Walmart after all, and I mean it's a beast. It does make a lot of money. It's just their stores are. I mean, I shop at Walmart, and I've been to their stores for years, and their stores have gone downhill. I mean, I don't know what management's doing, but I've become one of those who hate going there. The only reason I go there is that if they have whatever I want to buy, I can't find it anywhere cheaper, anywhere else. So I force myself to go there because they have whatever I'm buying. Like if I'm buying a BB gun ammo or whatever, I go there. But the stores you can see it gone downhill.
It's just so big. It's just like a mob scene. Like the ones in Canada, Nick, they're just like mob scenes in there. And I hate going in there too just because it's so busy. But I mean, that's a good thing. 120 billion in sales in the last quarter too. I mean, I just say Walmart isn't going anywhere. And this is one that I was looking at from perspective. I used to do this 4 or 5 years ago when the stock was in the 50s. I was just doing the buy the stock to get the dividend, enhance it with a covered call, right? Because I liked Walmart. Eventually got called away on the stock and that play ended. But what do you think of, doing stuff like that where you're buying the stock and just rating the call? So I'm not really totally protected, obviously still exposed to the downside, but when you get them cheap enough, just to enhance the dividend yield.
It's not a bad strategy. It's not for me, though. I don't enjoy doing that. It's just
because you're
I don't believe. But yeah, I don't like buying an asset in order to put it to work. If I own it, I'll put it to work. So the asset being the stock itself and then selling calls against it. Now I look back to 2013, I think it was in January, where it put in a low where I'm thinking it may go and see how it trades against that. But again, it is Walmart. But the bad thing is I don't like that. I need to extend a 5-year chart in order to really see the whole picture in Walmart. I expect to do this in like Zulily or something in some, a small flyer. But Walmart, really? And the fact
Hey,
that
Nick, a couple quick issues here, just real quick, 15 seconds each. Could you take a look at NLAK for us? New Leak Genetics had a nice run up here. Rob Hood's looking for some continuation here. Boy, big move yesterday. I kind of like to see this plow through 53.05 and keep going. You got any take on this one?
It's not pulling up for me. N as in Nancy, L-A-K?
NLNK. Nancy,
NK.
I'm sorry. Nancy.
New Link Genetics.
Yeah.
New Link, okay. Boy, it's the range is tightening. I know 15 seconds, so there is a move coming, direction unknown, because I have higher lows and lower highs. And this big candle here tend to tell me it might want to break up to the upside. And so 67.50 on the upside or 40 on the downside or lower. So
big range there.
Move coming, direction unknown.
And finally, Six Flags, Bob Wire here. I think they're the owners of Cedar Point. No, they're not. Six Flags is different. Any take?
Fun as Cedar Point.
Yeah. Six Flags, SIX here, coming out of a base here. You like this one at all? SIX.
Move coming and direction unknown because the range is tightening. It was wild and now it's pinpoint. So something's going to go on. Hold on, let me zoom in back to 1 year. Let me check it out here. Yeah, same. I needed to hold 44. Otherwise, 41 could be next. But if it does add one extra candle upwards. Maybe it sees 48.5 soon.
Nic
49.
Chahine, options expert. He joins us every Tuesday to discuss this week's options outlook. He's a Marketfy Maven and the author of Create Income with Options Spread. Nick, great to have you back. We'll talk to you again next Tuesday.
Thanks, fellas.
Thanks, Nick.